Thank you for joining us for another episode of Boom and Bust. I'm your host, Tony Clement. I am here at the News Forum where all voices matter. It is time again to have a discussion with Thomas Caldwell. He is the chairman of Caldwell Securities Ltd. In Toronto. And as always, we are discussing the markets, the economy, and lots of other topics as well. Tom, welcome to the program.
Thank you. Good to see you.
Could you just give our audience a little bit of a state of how things are in the Canadian economy right now? I did see some troubling unemployment numbers a few days ago, but maybe just give us a broad picture of where things are at.
Somebody asked me a little while back, are we heading into recession? And I said, no, we're there already. It's not showing in the numbers yet, but if you take a look at youth unemployment, people coming out of universities, that's well over 20% unemployment rate. Unemployment rate in Toronto is 8%. You're seeing stores close on a regular basis. It's restaurants, etc. You do not have the sense of optimism that exists even in a normal economy. Things are just too hard to do. You're seeing rising crime rates. You're seeing a lot of challenges. A lot of people in the retail business. We knew of a large retailer who said he was just going to go out of business because shoplifting is killing him. So there's stuff that's happening in the economy. And frankly, I don't think the government, and it's easy to pick at any one or two, I don't think they really understand what is going on at the present time. So the economy is slowing. It's very difficult to do things, difficult to even, commute, etc. So we are having a problem. I don't think it's really registered in the minds of governments yet that we have to do something substantive. I mean, they're all saying the right things, and I'm not disputing that, but it has to be substantive action, and we're not seeing it.
Yeah, and were you surprised that the Bank of Canada rate remained the same at last go-round?
Well, they don't. People look at the Bank of Canada as if they're going to solve problems. They can't. They're kind of the tail end of the whole mess. More important is taxation and taxation levels, regulatory burdens, etc., barriers. Interest rates are the final thing. What interest rates can do is stimulate demand or reduce demand. That's not really the problem right now. If you reduce interest rates, is it going to increase demands? I don't think so. If you don't have confidence within the economy, confidence in governments, you're not going to borrow money for a new enterprise. So it isn't the price of that money that's really impacting. So I don't think it's a factor at the present time.
Interesting. Can you comment on the state of the markets? They seem to be okay right now.
Well, it's funny. I was chatting with people and saying, well, the market seems crazy. The market doesn't know what they're doing. No, it's the people who say that are crazy because
Okay.
the market is a very good predictor because what it is in the final analysis, it's people voting with their money. And if the market's going up when everything seems to be chaotic, then the market's telling you something. And you've got to understand what the market is trying to tell you. And the market is telling you that people are trying to protect their purchasing power by owning assets, that is, pieces of large or growing or well-run companies, looking beyond the political crises of the day. So what they're doing is it's protection of your money. You're not going to do it necessarily in bonds. Gold and crypto may or may not work, but there's a volatility factor. But if I buy assets, good companies that are growing, that makes sense to me. So I think that's what you're seeing. And also with America setting up these barriers, many people think I should be inside the wire, inside those barriers to own those companies. So it really is quite a logical consequence of the world in which we live.
So you're saying that the market popularity or growth is a function of the instability that we're seeing around us. It's almost like a safe haven.
It is. I mean, that's basically the point I'm making. People saying, how can I protect my money? You're looking at, and real estate has always been a very good protector as well. But depending on which markets you're looking at, it still might be a little bit overblown in Toronto. We might have too many condominiums right now, particularly when we're cutting jobs. Where are these people going to work? They're not all going to end up at U of T with their parents buying a condo for them. So I think it is that. I think it's people trying to find the safest haven that they can find to protect their purchasing power from inflation and bizarre government policies and switches.
Interesting. We're having a discussion with Thomas Caldwell. He is the chairman of Caldwell Securities Limited in Toronto about the state of the market. After the break, we'll talk a little bit about the broader picture, the trade negotiations, China, US, all those kinds of things. Stay tuned. We will be back after these messages.